QuickBooks Online 2021. Bills. Enter, sort, and pay the standard month-end types of bills. Let's get into it with Intuit. QuickBooks Online 2021. Here we are in our Get Great Guitars practice file, entering and paying bills. Before we start, let's open up our financial statement reports, balance sheet, income statement, and then the trial balance. To do so, we're going to go up top, right-click on the tab up top, duplicate it. Then again, we're going to right-click on the tab up top, duplicate it. One more time, right-click on the tab up top, duplicate it. We're going to have the trial balance on the far tab, then the profit and loss or income statement, and then the balance sheet reports. Starting with the trusty TB, the trial balance, we're going to go to the reports on the left-hand side. We're going to be typing in up top the trial balance, and then we'll generate that report. And range, change it up top, ending at the period of 12/31/21, running that report, closing the hamburger, holding control, scrolling up just a bit to get to that 125%. Next tab over, we're going to be then opening up the balance sheet down to the reports on the left-hand side. We're going to then go to the favorite report, that's the balance sheet report. Range, change it up top, ending at the 12/31/21, run the report. Closing the hamburger, scrolling over to the next item, which is going to be where we're going to open the income statement. Let's scroll on back down, reports, and this time let's open the P&L, profit and loss. Let's open the profit and loss report. Range change up top, ending at 12/31/21, running that report, closing the old hamburger. And I actually like having the balance sheet over here, so I'm going to pull this tab, I'm going to grab this tab and pull it to the left. So now we got our trial balance and then our income statement and then our balance sheet over here to the left. Now we're going to be entering bills and then paying bills. To think about this, let's first go to our flowchart on the desktop version. You don't need the desktop version. I'm just using the little flowchart that they provide on it. So if we jump on over here, in the first month, when we thought about like the month-end type of bills, entering the bills for Verizon, entering utilities bills and whatnot, we simply wrote a check. Or we could use some other type of form like an expense form to decrease the checking account directly as we pay them. So that's what we would do if we're just going to pay them directly when we receive the bill, or something that you might do if you kind of have an electronic type of transfer, automatic transfer set up and you're doing it through, say, bank feeds. However, and the other way you could do it is you can enter the bills and then pay off the bills. That has some advantages and some disadvantages. The advantages to entering the bills when you receive them is that you can enter them at the beginning of the month and then kind of schedule the payment to pay them as late as possible or sort when you want to pay them. Another advantage might be that if you're actually printing the checks, then you can kind of sort the checks you want to print and then organize your printer and whatnot and print all the checks in the pay bill function. So we're just going to go to this method this time, entering transactions similar to what we did in the prior month, but this time using kind of the accrual method, meaning we will enter the bills first. That will increase the accounts payable and record the other side typically to an expense type of account. And then we'll simply pay the bill, which will basically be a check type of form, decreasing the checking account, the other side then decreasing the accounts payable. So let's go back on over. Now, one other thing, let's go to the first tab over here. And one other thing I just want to consider that if we were using the same method for the second month of operations, then we would have this kind of memorized transactions. So whatever we used in the first month, if we use the second month, then it's going to start to memorize the transactions. So for example, if I go down to the accounting down here, and we go to the checking account and just take a look at the register, I'm going to close up the hamburger up top, and we see at the end of the first month, if I scroll down, we had some transactions to Epiphone. Here's Verizon. We used an expense form for Verizon. So if I was to try to populate another form up top for Verizon and use the same form, and say I want to use an expense form, and then I start to populate this expense form for Verizon, it will say, hey, do you want us to populate that form with a prior transaction in it? If I say yes, then I can do so, and it already has basically the transaction down below. Now, we're not going to save this, but I just want to show you that the second month of operations should be a lot easier if we use the same format, due to the fact that the category down here will already be populated for us, and we just basically have to be changing the dollar amount that will be impacted. So this time we're going to use a slightly different method, so we're not going to have that feature pull over as much, but just note in practice when you're using a consistent method over time, that will typically be the case. So I'm going to close this back out, and do you want to leave? I'm going to say yes, let's leave, and then I'm just going to enter some bills here. So I'm going to go on down and say let's go and enter some bills this time, and then we'll pay the bills. So we'll start off with the Verizon bill. I'm just going to say this is going to Verizon, and that's our telephone company, and it's going to be in 30 days. We'll keep it there, and this is going to be as of 02/28/21. So there we have that. Scrolling it down, and the other side, notice the other side didn't populate this time, even though we paid Verizon before, because now we're using a bill type of form, and last month we used an expense type of form. So I'm going to say this is going to be the telephone. I'll just type it in there, telephone. That's the one we want, so I'll pick that up. We're not going to bill any clients with this telephone bill. We're not going to pull it over to an invoice or anything like this. So what's the amount then is going to be for the 365. So we're going to say the 365. What's going to happen when we enter this bill? Well, it's a bill, so it's going to be increase in the accounts payable. That's the thing you want to think of whenever you see bill. That means the accounts payable is going to go up. Then the other side is going to be going to whatever account we assign it to. In our case, the expense account that's going to be on the income statement. Also, just realize whenever we talk about a bill, we're talking about a bill form in this case within QuickBooks. And that terminology can get a little bit confusing when we talk about different sides of the transaction. So if I talk about billing somebody else, I can talk about billing somebody else, charging someone else for the services we do. But for QuickBooks, the form is an invoice. So an invoice is us charging someone else. A bill for QuickBooks means, if we're talking about a form, the bill that we got, basically an invoice from somebody else to us. So I'm going to go ahead and save this one. So I'm going to save and new. Let's go on over to our balance sheet, and then within the balance sheet, I'm going to go back out. We can see that what's going to happen is the accounts payable account's going to be affected down here. We should freshen up the report first. Let's run the report again. Make sure I'm working with fresh information. And then down below, we got the accounts payable. If we go on into the accounts payable, we then see, then there's our bill. There's our bill, just like we suspected it would be. Going back up top, and then we're going to go back to the accounts payable. Then on the income statement, next tab over, freshening up that tab, running the report, scrolling down, telephone, going into the telephone, and there we have it. Last time we entered it in here with a check, an expense form. This time we used a bill form. Other side going to a bill, that means the other side's going to be going to accounts payable, which is also, of course, indicated by the AP split item over here. Back on up top, back then to our reports. You can also check that out on the trial balance, so we may do that a little bit later. It's easier to use, well, let's just look at it real quick. It's easier to use the trial balance over here when you're looking at something like a bill transaction, because there is a balance sheet and income statement component to it, which you can see easily here and down here on one form, and you can drill down on it. That's why the trial balance is a good form to use. Back on over to the first tab. So next we're going to type in Spectrum, which is going to be our internet provider, Spectrum. So we're going to make a new vendor, and we'll tab on over, and then we're just going to add them. So this is we pay for our cable, our internet with them. So we're going to say, all right, that's on 2/28. We'll keep the date the same, going on down. And then we haven't assigned an expense account to this yet. So this is where we would want to go and say, okay, is there an expense account that's given to us by Intuit that is appropriate? If it is, maybe use that. If we don't like the term exactly, maybe we adjust the term of it and then still use it. If there's no account that's good enough for us, then we make another one. So if we go on down here, I'm going to say, all right, this is the first time I've gone to Spectrum. Let's see what they got on the expense accounts here. Contractors, employees, insurance, payroll, reimburse, sales, taxes, travel, on inventory, short-term, fixed assets. And then I'm out of the expenses here. So nothing I'm really impressed with. So then I can start to put in my own account. Now maybe I put it into utilities, because this is kind of like a monthly charge that you might group together with the gas bill and the electric and possibly phone. But it's probably one that's getting significantly high enough that I would like to put it into its own category. So I'm just going to call it internet expense. It'll be an expense type of account. I'm going to say tab. Going to add this expense type of account. It's not advertising. I'm just going to say like other expense account? Is there just like a general? Well, we'll keep it in utilities. That might be appropriate. This sub account doesn't matter all that much. And then the name is going to be internet. So there we have it. I just realized that sometimes when you have similar kind of account names, it can be a little confusing too. I get internet mixed up with interest when I try to post something quickly. So you might want to think about, making sure you have the names a little distinct as well as you go. But I'm going to keep it there. Save it and close it. There we have it. And we could put the description for like the time period that was covered, but usually it's a month-to-month type of period. So, but descriptions are good. I won't put one here though. It's going to be 180. So once again, bill, that means accounts payable is going to go up. Other side then going to the new expense account we set up, internet expense. Save it, close it, check it out real quick. We're going to go to the balance sheet. Open up the balance sheet, run the report, go on down to the accounts payable. It's now at 545. We now have Spectrum. There it is, the 180. Scrolling back up top. That also affects the income statement. Next tab over. Even though we didn't actually pay for anything yet, we have our new account that's going to be populating here, being the internet account. There it is at the 180. Back to the first tab. The next one's the utility company, which we did before. This is going to be Edison. So notice the vendor should populate on its own here, and you want to be careful not to be adding multiple vendors as well. So once you have the vendor set up, make sure you want to be consistent from time to time is the general rule, unless you're doing it on purpose for some reason. Be mindful of all the vendors that you have so that you can sort your information by vendor, which can be useful from time to time. Then we're going to go down, and we already put this to a utilities expense last time. We're going to do that again. This time it didn't populate once again here because last time we put it into either an expense or check type form. This time it's in a bill form. So I'm going to say utilities. So we'll say utilities. And I'm just going to put in utilities the gas and the electric, which is my decision on what to do there. And that there is a lot of flexibility on the expense side of things in terms of how many expenses do you want. Do you want the telephone bill in there? Do you want the internet in there and the cable or whatnot in there as well? So that's depends on what you want to see on your income statement, how much information you want versus how simple your statement will be. So I'm going to go ahead and save it and close it. And we're going to have the similar type of transaction. So let's check it out. Going back to the next tab on over, we're going to refresh the report once again, running it. To do so, scrolling down in the accounts payable, clicking on it. There's Edison. There's the 648. Scrolling back up, back to our balance sheet, going to the next tab over, the income statement. Scrolling back up, running that report. Back on down, we're looking for the utility. There's the utility company for Edison. Selecting that item, so there we have it. Last time it was a check, this time it's a bill. Going back up top, back to our income statement. Now let's take a look at this sub-account for the accounts payable. So if I go back to the balance sheet, we have this accounts payable, which should be supported by who we owe the money to. So to do that, let's look at an accounts vendor balance detail report. Let's go to the tab on the right and then right-click on it, duplicate it. So we have another report that's going to be open, which is impressive because we're working in 4 tabs at one time, going back and forth. That's efficiency right there. Although it can get overwhelming, you don't want to get carried away. But anyway, we'll close up the hamburger. Scrolling down to who you owe area. Who owes you? No, we're looking at the other way around. What you owe, that's what we want. And then we want to take a look at the vendor balance detail. The vendor balance detail up top. Dates, all dates, that should be good. And here we have the information. These are only the open bills. If you want to see the activity of what has happened, then of course you can go back up top and you could customize this report and say, I want to adjust the filters to it so I can see not just what's currently outstanding, but like everything. So I want to say, well, I have all the vendors, not the vendors. I want to look at the unpaid. This is the one, not just the unpaid, but all of it, and then run it. So now you got the detail with it. So here's going to be the detail. The open bills are the ones that we just entered now. The total is going to be that 1,193. So that 1,193, if we go back on over to the balance sheet, is going to be equal to this 1,193. Now let's think about paying these bills. So when we pay them, then it's going to be decreasing the accounts payable. The other side is going to be decreasing the checking account. So let's go to the first tab And I'm going to close out the bill. We're done with bills now. Bills are done. And then we're going to go up top and say what would happen next. Well, we would pay the bill. So we would think about the bills we want to actually pay and then go down to the pay bill feature, which will help us to sort the bills. We can also sort the bills by the other means, by looking at the reports and go into the vendor center to decide the bills we want to pay. If we're going to pay them all at one time and we want to print them out of QuickBooks, this is a nice little system to use because they're all lined up here and you can pick the bills that you want to pay now and then simply take the pre-printed checks, put them into the printer in the format that you want to be printing them in, and then print these bills at one time. So we could sort the bills, we could sort them by payee, reference number. Obviously, it seems we don't need to right now with only 3 of them, but if the larger the company is, the more they're going to have in accounts payable, and sorting the accounts payable can then be a full-time job at some point in time. So you could sort these items in these different ways up top. You could filter the items as we discussed in previous presentations. So I'm just going to be paying we want to pay the Verizon bill and the Spectrum bill, and we're going to keep Edison outstanding because we don't think they're going to penalize this. So we'll keep that one outstanding and we'll pay it at a later time. And so then if you're not going to have a check number, you can delete the check number here and use so that you're not using a check number if it's going to be some other type of payment and you just want to record the transaction in the system here. So I'm going to enter up top E1 for an electronic type of payment so it doesn't replace a check number. And then what's this going to do when we do this? Well, it's going to be decreasing the checking account, and the other side's going to be going to the decrease in the accounts payable account. So let's go ahead and then save it and close it. So we're going to save and close. And then if we go back to the next tab on over and take a look at our balance sheet, I'm going to run the report again. And then we're going to say, all right, now the checking account should be going down. And notice I have a date issue here, so I entered the wrong date. So if I scroll down, this is a common kind of issue, especially with a practice problem or anytime you're not working in real time, because I would expect it to be down here. I wanted to put it down here on 2/28. It's not. So if I wanted to sort it, I can see what happened. It's in today's date. I put it in as of today's date. But if I want to sort this detail, I'm going to say maybe I'll sort it up top to find my problem, customizing this, and I might filter it and say, let me sort it by the payment or the type of transaction. So I'm going to say transaction type, and I want a bill pay type of transaction. So the bill pay type of transaction, run that report, and then I can say, okay, yeah, there's the 2 that I would expect to see, but I put them in there as of 1/20, which happens to be today's day. And if you're working at a later point in time, and this happens to you, you want to make sure that your range here is picking up the current day so that you could kind of figure that out. And I'm going to go, all right, now I'm going to go back in and fix these. So I'm going to go back into this one and simply adjust the date of it. So I'm going to go into it. And obviously I did, in case you're wondering, I did this totally on purpose so that we can, go through this process. But in any case, 02/28/21, and then we're going to say save and close. So we've adjusted that one, save it and close it. And then the other one that we want to adjust was this one right there to Spectrum. So I'll do the same thing there. I'm just going to go right into it. QuickBooks lets us just change it. 02/28/21. So we'll just change it there, save it and close it. And there we have it. So now those are now in the proper location as we would expect them to be. Scrolling then back up top. And I'm going to hold down control, scroll up just a bit. We're at the 125. So those are in the checking account. The other side is going to be in the accounts payable. So if I go into the accounts payable account down here and scroll down, they should be at the bottom this time in the proper location. We have the pay bill check. Notice this is still kind of like a check type of form, meaning it's decreasing the checking account, but it's a special one, pay bill check, meaning the other side went to the accounts payable, not to an expense or anything else. If you want to know the expense that was hit with it, then you would go into it and you can actually link to the bill, which is right there, and link to the bill, and that's where you could see what income statement account was affected, which of course this was the telephone company. So if we're going to close this back out and scroll back on up top and go back to our balance sheet, and no effect on the income statement when we pay the bill because the income statement was impacted when we entered the bill. And now if we want to take a look at the other side or the detail for the accounts payable, which now has the 648 in it, we could then go to the last tab over where we had the transaction or the vendor balance detail, run that report, scroll all the way to the bottom of it. There's that 648 there. And then here's our detail up top with the Edison bill still outstanding. We then had the Spectrum bill that was paid off. So here's the bill, here's the payment, and we see the bill and the payment for Spectrum. That's going to be the general kind of what we would expect to see, it going up and then going back down again with the bill and then followed by the payment. So if we go back then to the trial balance, this is where we stand at this point in time. Let's refresh this report. And if you're checking your numbers, you could check them out at this with this report. I think it's the easiest one to use. We will also print this out so you can check it on your own time.